Hello, everyone, and happy holidays. This is Ernie Humphrey, the CEO, Treasury Webinars. I would like to welcome everyone to our webinar today, the FX Files, Secret Treasury Alternatives to Global Bank Accounts. First and foremost, I would like to thank our webinar partner for today's webinar, Tipalti. They share our strong commitment, not only to thought leadership, but to serving the Treasury and finance profession. And you'll see that if you ever go, and you should go, and visit their website. They have a lot of great resources, and I actually borrow those myself. So I actually leverage Tipalti to help me stay on top of my game, everything related to payments and beyond. So thank you so much. They are a longtime partner of mine. So sincerely appreciate their support. Before we dive into our agenda, a few housekeeping items. If you would like a copy of today's presentation, please send an email to Ernie@treasurywebinars.com. Again, that's Ernie@treasurywebinars.com. If you would like a certificate of attendance for today's webinar, you can also send me an email, or on the way into the webinar, if you selected that option, I will go ahead and send that to you after the webinar is over. I'm hoping we have some questions for today's webinar, so you can ask your questions at any time in the questions area of your GoToWebinar control panel. I'll do my best to get to all of your questions. If for some reason I don't get to your questions, I will follow up with you directly after the webinar. Also, we are going to have some polling questions for today's webinar. And so those of you interested in receiving a certificate of attendance that you might use for CTP credit or NASBA credit, you'll need to answer all of our polling questions here today and stay on for the remainder, the whole webinar, and answer the short survey at the end of the webinar today. And I appreciate everyone's consideration in answering all of our polling questions today. So what is on our agenda today? So first, we're going to start at a very high level before we really get into the complications of international accounts payable, which is obviously a main reason why folks have global bank accounts. And then we'll talk about some alternatives to global bank accounts. I know the headaches of not only international AP, but global bank accounts all too well, as I was a longtime treasury manager, and we had bank accounts all across the world when I was back managing treasury. And I also, when I worked at the AFP, I was in charge of managing the service codes, which help us understand our bank pricing. So again, we'll start out strategic role of accounts payable. Then we'll talk about some of the complications of accounts payable. And as we take our journey through the webinar content today, I'll be sharing you with some survey results in order to put some context around really what's going on in the arena of accounts payable, what we're seeing, and so help you benchmark where you're at related to other companies. And one of the things that I'm happy to report is that their expectations of accounts payable are going up. And so one of the things we'll look at are what are the resources that accounts payable needs? Are companies investing in those resources? What are the skills that we need as accounts payable becomes more complex? Then we'll talk about the strategic value of leading technology and managing your international accounts payable, and also helping you manage your FX exposures if done correctly. And then, as always, we'll offer some closing thoughts and recommendations. So let's talk about the strategic role of accounts payable. And just a note, I've been doing a lot of surveys this year related to accounts payable and payments, and what I've seen across the board is that accounts payable is being looked to much more often, rather than just I would say, a cost of doing business, right, or a transactions hub, which is what it was when I was back in Treasury. But now accounts payable is being looked towards more to help us identify and help mitigate our risk, help us make sure that we're ready to do business in our other countries. So whether we're adding international suppliers or international customers, right, we need to make sure that we're able to pay our suppliers and do business in these other countries. And so it's incredibly important. And the other thing is that if you're not really steeped in accounts payable, there are a lot of people outside of what you consider traditional accounts payable that are involved in the payables process. And so one of the things that often happens with manual processes and outdated technology is that people are spending a lot of time, right, in the payments process. So they're wasting time on non-value add activities, and that's across the office of the CFO. And so we need to make sure that folks are spending as much time as possible on strategic activities, because the role of the CFO, I wouldn't say it's already evolving, I'd say it's evolved. Now we have the technology. CFOs are being tasked with really impacting performance across the enterprise. And one of the things that we need to do, all of us in Treasury and Finance, is we need to remove any productivity drags that exist across the organization. And accounts payable can be a huge productivity drag. So it can allow the Office of the CFO to give more support to the CFO in helping us make data-driven decisions in driving performance across the enterprise. So that role is changing. Again, AP is being looked at more as a strategic partner, which is good news. So let's talk about, what are the expectations for accounts payable as we go into 2022? Going to share some results from a survey that I conducted with one of my strategic partners. We had well over 250 responses. This was a US centric survey. So we asked folks, your responsibilities of your AP team going to increase in 2022? Increase slightly. We have 43%, increase significantly, almost 1/4 of those respondents. And so we've got almost 2/3, right? So the responsibilities of the AP team are going to be going up. And so we need to make sure that in terms of the accounts payable and payments, what we need to do, we need to make payments as efficiently as possible, and I will say as safely as possible while mitigating risk as well. And so we're seeing, again, to kind of mention that the strategic role of AP is on the rise, the responsibilities are on the rise, strategic roles are on the rise, right? So we need to make sure that we are empowering people to spend as much time as possible on value-add activities. The strategic role of accounts payable, this is incredibly exciting. 41% of the companies responding to the survey said that would increase. And so just a note on the demographics of the survey, there was a really good mix across company size and across company industries. And so as we look towards maybe we consider small, mid-market, and enterprise, there was a big tilt of survey respondents, over 67%, maybe more, not maybe more, in the mid-market and enterprise space. And so it's incredibly exciting to see that role is being recognized. Now we need to make sure that we're having the resources available. And then how do we understand what those complications are and provide these folks the resources? And of course, we're going to absolutely get to how do we make international accounts payable more efficient and do that safely. And so just some more expectations, more important skills to upgrade that we'll see. And hopefully, if you're not in accounts payable and you're the treasurer, treasury professional, or you're the CFO, you need to understand that these are things where your folks might need some help. You need to invest in your professional development of your team, and you can expect more of your AP team. They're up to the task. So some of the most important skills to upgrade, I'm happy to see cash management was there. And so if AP doesn't report up through treasury, there needs to be that relationship there, because I still see all too often where AP is managed in a silo from treasury, and treasury, we should be optimizing the cash conversion cycle. So we should be working with our AP team. So we want to take control and optimize, right? Of not only when we make payments, but how we make payments as well. Data management, data analytics, I think this speaks to the higher expectations. AP automation skills, because more and more companies, I would say, there's really good adoption, even on the small end of the mid-market companies, of the value of AP automation / payment solutions. And then agility and flexibility. And so all these things speak to, right, as someone becomes more of a strategic partner, those are all skills that we need. Of course, oral communication skills, and then professional development opportunities. We ask folks to share with us that they're going to stay the same or increase. And so it's good to see that 40% of those professional development opportunities are going to increase. And I can say that the spectrum of opportunities available is actually pretty broad and wide. And so it's important that folks understand. So if you're not the AP leader, maybe you're the treasurer, CFO, you talk to the person who's really the direct manager of all the AP staff, and help them go through this skills assessment, right? What are the expectations of AP, right? What are the skills that my team has right now? What are the skills that we need to deliver on that value? And then what's that gap in there? And how do we put together the professional development opportunities for our team to mitigate those gaps? And that could mean hiring someone, but most often than not, that's not the case. And as we know, we're going through the Great Resignation. So getting that talent in is going to be a little bit more challenging than ever. So some of those expectations, I think it helps us put a nice package around the whole process as we kind of start to dive into international accounts payable. And so talking about AP complications, I'm going to go ahead and launch our first polling question because I know that everyone is sad and I don't do enough polling questions. So I'm asking you to share, if you would, take a moment, what percentage of your company's payables are denominated in currencies other than US dollar, they're cross-border? Is it less than 5%, 6 to 20, 21 to 50, over 50? Or you might not know at this time. Again, if you're interested in receiving continuing education credits for the webinar, you have to answer all the polling questions. I appreciate everyone's consideration in answering all the polling questions here today. Also, just want to remind you as we go through the webinar, if you have any questions, we can take your questions at any time in the GoToWebinar control panel. I will leave the polling question up for another few seconds, and then we'll start to dive in a little bit, right, about what those complications are. And then, of course, we'll talk about having your payables denominated in a foreign currency, which absolutely makes AP more complicated, and we'll do a deep dive into that. Go ahead and give you guys a few more seconds. Appreciate everyone's consideration and just push the button for us. It helps us out, and we'll do a better job in 2022 of communicating, right, the survey results that we see and what those implications might be. So let's go ahead. I'll give you 2 more seconds because it's Christmas time, right? All right, let's go ahead and close that. Let's go ahead and take a quick peek. So we have a pretty good mixture here. We have 33%, which over 5%, obviously, that's a big number. And it can be different, right? It can be the amount of dollars, right, versus the number. And so you can have various degrees there, right? So if it's a lot, you may have a lot of small invoices across multiple currencies, which absolutely makes it more complicated. Or you can have some really big invoices, which can create some FX exposures. Those of you, maybe you said, if you don't know, you know what I'm going to say. It's your job to go find out. That's incredibly important. If you're in the office of the CFO, it's incredibly important that you understand, especially if you're in treasury or you're the CFO or in finance, you really should understand what those risk exposures are and how to manage those exposures. We won't dive too deep into the FX exposures, but the main ones are translation and transaction exposures. Happy to have the conversation with you. I'm offline about the webinar about that as well if you need more information on that side of it. That's a whole nother probably a webinar series, right? And so first of all, let's just level set, right? Our companies believe they're going to see processing complexity increase in accounts payable. For this, you as a company, where you stand depends on where you sit, but just in general, companies are expecting to see more complexity in accounts payable. And so as you see more complexity, almost all the time, the value of doing things more efficiently and leveraging the right sizing technology is going to be more valuable to you and make that ROI much higher to investing in the right technology. So we had a 31%, the same survey I talked about earlier, over 250 responses across the country. 24% increased significantly. So that's a pretty big number, right? 1/4 of that processing complexity. So part of that is, okay, what does that mean? Now, what additional resources do I need for my team? Do they need additional resources? We need to be aligned on that. And then as we talk about it increasing, we need to understand what are those complications? What's the nature of those? What's the root cause? What are the sources of that in terms of people, processes, and technology? And then, of course, as your invoices get harder and you have more invoices, well, the more invoices you have, that can definitely complicate your process if you're not adequately staffed or if you don't have the right technology to make things run efficiently. As we all know, when COVID really started to kick in and some companies still feel the pain, having folks work remotely has made things incredibly more difficult, and especially approvals, right, and documents. And if that's not in electronic files and accessible, that can make things incredibly more difficult, and I would say less efficient. And then invoices process, again, we see over 2/3 of the company are going to see increases. And so again, we know these things are happening in 2022. are we ready? The last thing that we want to do, especially from accounts payable and treasury, is be the cause of us not being able to capitalize on growth opportunities or to help us in our supply chain. I know we have supply chain issues, but part of that is that we're now motivated to have multiple sourcing opportunities, and so we need to make sure that we're ready to take those on. And we'll talk about the complications in expanding that supply chain as well. So let's go ahead and talk about some more complexity drivers here. Dive in on that point just a little bit from some survey results and share with you my experience, not only in dealing with these, but in having conversations with treasury and finance professionals, which I do throughout the year on a daily basis. So the most common one was multiple entities and subsidiaries. That can be dicey. So a part of that is just, I like to call it the parent-child relationships. So it gets even more most complicated when maybe your parent company is located in the U.S. and then they have subsidiaries across the globe, and you need to figure out, how all those align together, how those are billed, how you make sure that you have a sense, right, of the risk exposure associated with all those, how that can disrupt your business, so you can have a lot of business interruption risk from one supplier. Those of us in manufacturing know that purchase orders, I mean, almost everyone does purchase orders now. There are a lot of complications there. Customized levels of approval that can slow things down. And of course, some of these things are interrelated. There we have business entities across international borders. That complicates things. We'll dive in there in a few minutes, just having that currency exposure. But then you have regulatory issues. You have the exchange of information. You have time zones and all those good things, and then suppliers. And so really, as I said before, there are two pieces to this, and as far as big pieces to international complications, whether there's business entities across the border, but also you have business entities across the border and or you have suppliers outside the US. Do you have to make payments to multiple currencies? That can be complicated. FX risk, FX management, and then that most often companies still require to have bank accounts in other countries. So let's just say it's a US perspective. You have accounts outside the United States, and I could talk for days about that. I probably still wake up having nightmares. Back in the day, it was hard to do business in almost any country. And then I have this one just kind of for myself as a little fun. We're in manufacturing, enough said. But if you look at all these drivers of complexity, and we'll dive in here in a few moments, but to me, you can see that the right sizing technology helps mitigate the impact of the complexity on your efficiency and your risk exposures. And so anytime that you don't have the right technology, you don't have visibility into what's going on, right? The how and why of accounts payable. You have barriers to information. You have barriers to supplier onboarding. You have barriers to help mitigate and resolve issues with suppliers. And they're probably going to be a little bit more time consuming if you have issues with suppliers overseas, because you're going to have time zone issues in addition to other issues, which could include language and many other things. And so as we start to look at inefficiencies and risk exposures in accounts payable, it's often pretty clear that technology is a way to help us mitigate or eliminate those risks. The good news is that the cost of being able to invest in the technology to help mitigate these risks and inefficiencies the business case really almost always makes itself for even companies that are on the smaller side. But there's also another side of it with the longer term view in that what you want to do is grow into the technology. So the last thing you want is your technology dictating your business practices. And what's really exciting to me is that companies such as our webinar partner today, Tipalti, they have seen record growth, right? Despite of what you might have thought before the pandemic hit, that people didn't want to implement technology during this pandemic, and it might be disruptive. Well, people are finding that it's necessary, and it's also, people have talked about how painless implementations and getting people to use it are, and I think we've seen that That's not really the case. Actually, that is the case, that we can get those systems implemented. And this is a case. It's not for everybody, but I have talked to people on the phone that have implemented an AP solution in a week, 2 weeks, if not less than a week. And so I'm glad to see that that's growing. And also to think about it is that your competitors are investing, right? So maybe there's competition in your industry with your supply chain. You have to be a good partner, right? And so you could be a competitive disadvantage. So believe it or not, accounts payable done wrong can hurt your top line growth, not only because there's a productivity drag on your team, but also because your competitors are going to have better relationships with your suppliers and might take away some of that bandwidth in the supply chain. And then you also want to be cognizant of the issues that take up the most time in your supplier relationship management. Again, that becomes more complicated as you go across borders. Again, some of these are related. More information to process an invoice, 29%. Timing of a payment, right, 31%. And there are oftentimes when there's timing of payment, when we put it in that classification, oftentimes either it's reality or it's an excuse. There is an asymmetry of information going on, either between your internal team or between your internal team and the supplier. And so a lot of these issues can be mitigated by removing asymmetries of information. If you have visibility internally across all, hopefully you have no silos, into all the activities, right, related to suppliers, all the activities, we can help identify trends, we can help mitigate issues, we can track how much time people are spending on the phone. And so all of these are just giving you a little color context, especially if you're not in the accounts payable, I would say a little bit in the weeds. The importance, really, it's some sense it's about understanding all the dynamics and complications in order AP done right. So hopefully this is valuable information. And also it can help spur conversations that you might want to have if you're not in accounts payable, you're in treasury, the CFO, you never really had a sense of all these complicated issues and conversations that you needed to be had. And hopefully I'll inspire you to have those after the webinar is over. And then just diving a little bit deeper by company size, but root causes of disputes as well with your suppliers. And these are things you should be tracking. If you don't know, if you're not in accounts payable, you should find out. It's valuable information. Access to supplier activity. This is something that I often talk about. You can't manage what you can't see, right? And it's not fair to have information on your side and the supplier has different information on your side. Asymmetry of information, again, just communication, right? And it's still 40% even in enterprise-sized companies. And then, of course, as you go across borders, that becomes a little bit more difficult, probably a lot more difficult. This was surprising to me. I guess in some sense, managed AP in silos, and the biggest percentage was enterprise-sized companies. That to me is mind-boggling. And I'm not talking about having a shared services or having that situation or outsourcing it, but managing AP in silos, given all of the advances in technology that we have. Too much paper, we still have that. I was surprised that the systems weren't more identified, but I think that's just something that people don't really kind of connect the dots, because access to supplier activity, right? If you had a system that allowed you to do that, right, then that wouldn't become an issue. So these are interrelated as well, but just interesting as well. Also, always find it useful to show by company size a little bit, because again, where you sit is really what's going to resonate with you, and just kind of food for thought. And among all the other items that you take away from the webinar, I always want to convey that supplier relationship management is incredibly important and impacts the bottom line. So what about just dive in a little bit more on our international complications. Supplier onboarding can be more complicated, and then we'll talk about those a little bit. We got some of those down below. But one of the things that we need to be careful of is, what if there are sanctions? What if there are restrictions? So we need to be able to make sure we should be doing business with someone. But I don't think this is looked at enough. Your relationship starts through that process. And so you're going to make a good impression or a bad impression on the onboarding process, or maybe there's just a glitch in your supply chain. And so there's a supply chain issue, right? That there's a way to mitigate that. Let's say you're sourcing from overseas, right? There might be a way to mitigate that issue, even though it might cost more. If we can source some materials in the US, oh, well, our onboarding process for suppliers takes 3 weeks or a month. Oops, if that would have been more efficient, right? It empowers your business agility. We talked about supplier communications. In some sense, that becomes more difficult. Again, some of that depends on the technology, not only you have, but your suppliers have, right? What countries they're in. There's time zones. That's a whole webinar. You can be complications in information exchange, right? Those could be as basic as language, or they could be file formats, right? So there's invoice processing time in general. You would find that usually goes up. We'll talk about payment methods, and so we'll take a look at the most common payment methods and what those are. And then payment timing, I guess that's complicated wherever, depending on how much collaboration goes on. So if AP and Treasury are managed in silos, there won't be educated decisions most likely on the timing of payments. Do we have discounts? Does it make sense for us to take those discounts? Almost always yes. And then the methods, how are we making payments? And are we making those in the most cost-effective way that are also don't expose us to risks we can't handle? And then these letters will make some of us cringe that are in Treasury and operations. We have tax, of course, but OFAC and FCPA compliance, Federal Companies Practices Act and tax compliance. Those are got to make sure we're on top of those. And then, of course, the FX risk exposures. If we have liabilities that are denominated in foreign currencies, and there are certain countries where your liabilities they want to be paid in those foreign currencies, they're denominated in those foreign currencies, and what that does is that creates a transaction risk on that FX risk exposure. So if your basis of what you're gonna get dollars, right, but your suppliers need to be paid in pesos, then there's that transaction risk. And then there's also the translation risk if you have payables denominated in foreign currency, as we translate that back maybe to US dollars on our balance sheet, so we can be exposed on that front as well. So let's dive in a little bit on those FX exposures, because that's really one of the carrots that we gave you to join the webinar today. Assets and liabilities in foreign currencies, I just kind of walked through that. International AP creates liabilities, can create liabilities in foreign currency or foreign currencies. So the more currencies that you have to where you're exposed to that translation or transaction risk, the dicier that can be, not dicier, but misalignments there can cause you to take hits not only in your balance sheet, but in your P&L, make your CFO unhappy. I had when I was in charge of managing FX risk exposures, I don't know, it's kind of a funny story. So we actually had a fairly significant positive gain from FX gain loss in the income statement, and I got yelled at because he said that's supposed to be zero. And so he goes, you're not an FX trader. So we found out that there were some misalignments in terms of our assets and liabilities, and some of those were intercompany payables that we had. And then related to that, what I just mentioned, fluctuation impacts liabilities in your company's functional currency again. So there are misalignments in assets and liabilities between, like, say, US dollars, right, euros, and then there are ways to have natural hedges where you want to align, and when it makes sense, your assets and liabilities in the, let's say, pesos, we want to make those in some cases, with exceptions, that those we want to make those as close as possible, and so we can mitigate that inherent risk that is there. So let's talk about some of the countries that you might be in or look to be going into, just to, nothing else, give you a heads up. Payees have a high propensity for wanting to be paid in a local currency. So what I'm going to be showing you the next few slides are just some resources that Tipalti offers, which I find valuable. And so this is a type of information that you'll find out there that can be helpful to you. And so, you can see Austria, Australia, you can see some of those countries there. You can see some of the folks, obviously, some of those are going to be, you can say, well, those are euros, Australian dollars. So you want to get a sense. Things are more difficult. It's still difficult to do payments in China and certain countries like that. But just interesting to me. Mexico is also one that's pretty high up there. So just again, where you stand depends on where you sit, but also this might help you in some sense as when you're looking to source in another country. There are a lot of things that you need to look at. And one of the things that should be looked at in terms of your cost of doing business is going to be what are the FX exposures, right, that you're taking on, and if we have to have a bank account in that country, what's that going to cost us in terms not only of the bank fees, but also in the time to make sure we're mitigating those risks over there. When I worked in Treasury, I actually come to find out that in some of our countries overseas, the signature cards, which authorizes people to do payments, weren't really up to date. I found some people that were on the signature cards that were no longer with us. They had left this earth, so they'd actually passed away. So those are types of things you need to understand, and that's just one of the things that will tell you, which is a benefit of not having, is rationalizing the number of foreign bank accounts that you might have. So this is just interesting as well in terms of the payments method, the preferred payment methods. So we have ACH, which is not surprising in the U.S. Checks over there in Africa, which I thought was surprising. I'm going to have to say it. Even though I love electronic payments, there's still a prevalence for checks in the U.S. Survey results I've done this past year show that 30% of suppliers prefer to pay by check, and 30% of companies prefer to be paid by check. So there's some inherent barriers there. It's important to note that the costs are different, right, with these different payment methods, and you have to understand the all-in cost, and also as far as on your supplier side, what's the cost, to them for accepting that certain type of payment. So you want to make sure that they're educated as well. So you don't want to just without conversation pass along all these costs to your suppliers. That can cause damage to your relationships. And there are also risks associated, fraud risk associated with each type of payment. So those risks have to do with people, process, and technology. Your people internally, well, what about your partners externally? What kind of data they have, encryption, where that information is stored, technology, and then your processes as well. So again, just another interesting resource there just to see. So let's just say someone is demanding or adamant, in a certain country that they be paid a certain way, then you might do some research and say, oh, that's not really, so let's take control of how we make those payments. So that just don't accept that that's just the way that it's always done. So I apologize if this is a review for some of you, but I think it's important for those of us that really aren't really steeped in the payments world. This is especially important for CFOs, controllers, and others that are going to be going into new markets to understand I'm not going to read through all these things, but common wire transfers, global ACH, right, PayPal, and then we're seeing more e-wallets. And so wire transfers across borders, they can be fast, they're reliable, widely international, and common for high value amounts. They can have relatively high transaction fees, and it just depends on issue resolution fees. For me, once I would send a SWIFT message to maybe an intermediary bank or to the receiving bank, those were usually resolved. And then as we start to see global ACH, it's a lot less inexpensive, it's reliable, but there are some complex rules, and you really need a bank portal or an API to make those things happen. And then PayPal, it's fast, simple setup, but there's a lot of reporting requirements. The fees can be unpredictable, more prone to fraud, and then there can be issues during withdrawal. And so I'll let you read through the payment. I think it's just important that I know we cover a lot of information here. A lot of the information that I give you, I'm going to give you a lot. And part of that is that I think it's information that you need to have. That's why I encourage folks after the webinar is over to look through the slides, maybe listen to the recording, and then just see if you have any questions, and then follow up with me or a webinar partner, maybe someone internally, and make sure that you have this information at your disposal to add the most value you can, whatever department that you play in. As far as managing the risk exposures, how we do that on a high level, I talked through these a little bit already. And again, to me, it's visibility. Can't manage what you can't see. So we need to have visibility, especially if we have, those international liabilities. We need to have visibility into that through our ERP. We need to have visibility into our bank account activity. We need to have visibility in terms of helping us understand the how and why of payments. And so as we're looking for that forecast, right, we want to know what our forecast is in payables. Well, guess what? If we have foreign exposures, we need to understand, right, what's the forecast for those exposures? Am I going to be short or long in these currencies? Do I need to invest in some sort of derivative or a hedging instrument in order to manage those FX risk exposures? So you can't manage what you can't see. The two parts of that, right? What happened, right? More importantly is why it happened. And then also when you go into AP, how, how and the why, right? What happened? We need to understand the root causes of exposures, right? Mismatches of exposures. Natural hedges are places where we have an offset in assets and liabilities in the same currency. And so that's how I mentioned before. And so sometimes you can help create natural hedges, and if you can take control of how you're invoiced or how you're invoicing companies on that side of it, then you also have to look at it in terms of your company's risk tolerance, in terms of what they're willing to accept, in terms of the impacts of misalignment in your, or the magnitude of your exposures, again, which can be seen, which is not good in any case through your income statement, but also through your balance sheet. Part of what I learned was a big part of that is just understanding, right, where you're at, right? Take that look in the mirror, but also, and just as important when you're making acquisitions, right, what type of exposures are we inheriting there? Accounts payable, what bank accounts are we inheriting overseas? Do we really need those bank accounts? So yes, Ernie is going to take a breath and give you guys another polling question. All right, so let's trying to get a sense on your. I know you're all very interested in the how to potentially eliminate those global bank accounts. So just curious, if you share with me, how many bank accounts does your company have that are not denominated in US dollars? Is it 0, 1 to 2, 3, or sorry, 1 to 2, 3 to 5, 6 to 10, more than 10, or 0, or you're not really sure at this time? Again, if you're interested in receiving continuing education credits for today's webinar, we'll have to answer the polling question. I appreciate everyone's consideration and just pushing that button for me. And then also I want to remind you that we can take your questions at any time, the questions area of your GoToWebinar control panel. I also want to remind you that if you would like a copy of today's presentation, please send an email to Ernie, E-R-N-I-E, at treasurywebinars.com. Again, that's Ernie at treasurywebinars.com. Okay, I'm going to go ahead and leave the polling question up for another few seconds. Then we'll go ahead and take a quick peek on where we stand. And this is also for me to help me understand how much time to really dive in on the remaining sections of the webinar. So I appreciate everyone's consideration in taking the time. So it's good to see, I mean, because that's webinars, right? The title, 46% have more than 10. So even if you have 1 or 2 bank accounts, it can be incredibly inefficient. You want to make sure you rationalize those, which means that you need those. And then if you don't know, of course, your job is to find out. So thank you so much, everyone. So just a little bit more background, again, to make sure we all level set, making payments in foreign currency. So if you need to do that, direct payments from foreign bank accounts. So what does that entail? So I'm going to help you understand if you're not feeling the pain directly, or maybe you just hear about it from your treasury team. You have to manage foreign bank relationships. So especially, we used to have these, they used to be called correspondent banks or partner banks, and sorry banks, but that never it doesn't really work out that way. So you have to manage the relationships. You can't necessarily count on your US, maybe your bank's headquartered here in the US, you can't count on them to have any control or influence over, even if it's their branch overseas. So you need to manage those relationships. That's just a fact. You have foreign bank reporting in general, just getting the information. We've come obviously a long way on that front. You got to make sure you can get timely, and can't manage what you can't see, but also you're going to have FBAR requirements as well. You're going to have bank fees, so that's going to be even more complicated. We'll talk about that just to understand what you're being charged and why you're being charged. Again, even if you have a big international player, it's going to be difficult, and I'm going to discuss this in a little bit with you. It hasn't gotten enough press. The service codes, which help us all understand what we're being charged, that are managed by the AFP, those are changing. That you haven't seen them on your bank statements, but you will. They called to update the 2020 service codes in 2022, whether it's first quarter, second quarter, third quarter, fourth quarter, you are going to start seeing some different codes, and you're going to have to figure out how to understand what you're being charged and why. And then just foreign bank account management, as I mentioned before, just getting an account open, managing those signatories, managing what people are allowed to do and authorized to do. That's incredibly complicated. I could tell you stories for hours about how I tried to open bank accounts in other countries. I had to get things translated, signatories going in. So there's a lot of information there. So those are all some of the things that we need to consider when we're making payments in foreign currencies. Again, I have experienced those directly. So again, if you have any questions about that, please pop those into the questions panel. Just so from your headaches, again, the account opening, that can be an incredibly painful process. I'm sure it's better than when I was in Treasury, but it's still painful. Again, managing the signatories, the information reporting, the bank fees, and the relationship management. So all those things, in addition to just the fees that you pay, are difficult. And then just for me, just making sure that certain payments were being made, having visibility into that. I used to call myself the payments detectives. And so avoiding those calls from suppliers, hey, where's my money at? When am I getting it? Like, I don't know. I don't have visibility. I don't know what happened. I'm going to have to. And then especially when I was managing cash in Mexico, they had to do everything by checks back then. And I had to make sure they had checks on site, manage those checks. And so there's a lot of headaches on that front. Now, I'm not saying that you can eliminate every single foreign bank account that you have, and we'll talk about the risks that are associated, or the things you need to consider if you're going to really go out on the fronting edge of what technology will let us do in accounts payable. So just some information here. If you want more information on the service codes update, please let me know about that. I'll be happy to get you information on that. Again, just those of you who are not familiar, the AFP service codes are often found on your bank analysis statements, and then they're critical for the analytics to be performed. Well, there's a lot of issues. One thing that I will tell you is that before this update, there wasn't even alignment between what you'd see on a domestic statement and an international statement, even from the same bank, because a wire in the US was not a wire overseas in other countries. And so one of the things that's a risk to having that bank account is you don't understand what you're paying for and why. So you can be paying thousands in fees that you don't really understand what's going on. You can have services turned on that don't need to be turned on. You can be duplicate payments for things because they're not coded the right way. And so just to give you a sense of the magnitude of the change, only 32% of the codes that AFP had are unchanged. And so these are the things, if you are going to have those foreign bank accounts, if you have any bank accounts, it's important. There's new product families If you're leveraging trade finance, integrated funds transfer, there's new codes for instant payments, for RTP, real-time payments, and then on imaging fronts. But you'll see that there are modified 24%, right? Depreciated means they've taken the codes out, 31%. So not to scare anybody, but it's something that definitely deserves your attention. And again, as you start to have these payables overseas, that drives the need for these bank accounts. And those are all things you need to consider as sort of the complications and the cost of doing business in other countries. So how do you make payments in foreign currencies? Again, I apologize if this is basic, but you can buy foreign currencies through FX trades. Obviously, if you have receivables overseas in that currency, you can do that as well. For the purpose of our discussion, we'll say buying foreign currencies. You have to understand the relevant currency markets, and you have to manage the spreads right on your trade. So when you're converting dollars into Australian dollars or Australian dollars into US dollars, you need to understand what we call the FX spread is there. If you don't pay attention to that, your banks or whoever's ever doing your FX trades is going to make a lot of money for all of you. And so here is my drum roll here for the what the secret alternative is. There is technology, there is company out there that you can fund payables with one file to cover all USD and non-denominated payments. So you can send one file, right? One file for all of your payables in different currencies in US dollars, and then this provider is a global financial institution, and they will make all your payments in your foreign currency. So whether that's pesos, Australian dollars, or euros, you can send that one file, and they will make sure all those payments get done for you. Helps you rationalize your international bank relationships. Some things where it can get a little bit dicey. There could be some actual regulations in countries. A lot of times people have those relationships because they have payroll in other countries. It's especially valuable. Let's say you only have a couple of employees, right, in a country, and you look at the cost of setting up those accounts and all the things I mentioned earlier. Well, now you can really easily put that in that one file and have that taken care of. And there can be complications of negotiating and funding your FX trades. I could do 2 webinars on that. And so unless it's an automated thing, what you have to pay attention to the spreads, right? So you have to negotiate. When I was in Treasury, when we were doing trades, I had to get on the phone, and talk to my bank. Of course, bigger companies, you have more clout. You can get a pre-negotiated spread, but then you have to worry about both sides of the trade, right? Negotiating a trade, funding the trade through your provider, but also making sure that your provider is sending that money, and you really don't have visibility, right, into whether that payment has been made. If you do it through a relationship such as this, you have that visibility. And then we talked about it can mitigate bank fees and then risk exposures as you're mitigating not only the currencies that are involved, the number of people that are involved, and the reporting that is involved in having a lot of that information in one place. To me, this was a game changer idea for me. Again, one more time, you can fund your payables with one file. So one file, you can have a file that has currencies in multiple, that's denominated in multiple currencies across almost all the countries in the whole world. So what you do is you send them one payment, US dollars. Now, here's the caveat, right? We're all intelligent people. What you have to do is you have to understand the spreads, right, on that. So, okay, you're going to take all my money, you're going to convert to all these spreads. Well, you have to explain to me, right, where are you getting that rate? How do I make sure that I'm getting a good rate, right? And so you need to make sure that you're getting that rate, and you have to have a way to benchmark that. And then you got to benchmark, okay, there's so much less complicated not to manage all these trades. I'm not saying you will, take a little hit on your FX exchange exposure, but look at all the money that you're saving, even from staff. Maybe you have to have AP people overseas. You might be able to not need that anymore. Your exposures, your bank fees, your bank accounts, And so just want to kind of, and then I want to run you through, oh, let me do a polling question here. Those of you that have foreign bank accounts, if you don't, please let me know of that as well. I'm just curious, we mentioned all these challenges. 46% of you had over 10 bank accounts. So just curious what your biggest challenge is. Is it the administration, reporting, managing and understanding your fees, or your just your communication and having that relationship with those direct people? So I would say your relationship with the people that are let's say it's Mexico, managing a relationship with the bank people of Mexico, not relying on your one contact, right, in the US. Not that it can't be done, but that makes it difficult. So again, I appreciate everyone's consideration in answering all of our polling questions here today. What we're going to do is going to leave this up for a few more seconds, and then I'm going to kind of show you, I think it's easier through a diagram to show you the way that it usually works, right? We'll talk about a company profile, how they might make payments, and then what it would look like if a company were to decide to leverage a solution that's out there where you can send one file and have that funded with your partner. So I'm gonna go ahead and leave that polling question up for a few seconds. All right, thank you so much, everyone. So a little bit surprising to me, managing your bank fees. That's a little surprising. So I would have expected bank reporting and managing bank fees, of course, bank relationship management, communication, that's taking up quite a bit of that. All of these things can be significant. To me, what I've seen, to me, it's about managing your bank fees. I don't even understand what I was getting. It's kind of like a Rubik's Cube, but then the bank relationship management, right? And if you don't know, this is something that's important for you to find out, right? What are the challenges? So this is, again, can be a very much time wasting activity dealing with all these foreign bank accounts. So thank you so much. I appreciate your patience here as I walk through this, but I think it's going to be helpful for folks that really aren't very versed in this area, but also on the backside if people want a copy of the slides. So here's kind of the example. They have global operations with cost plus entities in the market. They have multiple banking relationships in a region. They have somewhat of a disparate AP process, and they have all these pains going on. So what happens? Customer sells service. Customer receives US dollars to the US, let's say Wells Fargo account. Customer has US funds, 5 different banks in local currency, and then they make payments from 5 different bank accounts. So they've got payables in these 5 different bank accounts in the US. So they've got payables in pounds, in euros, in Canadian dollars, in Australian dollars, in Bank of Japan. Well, what does that look like? They have all these bank relationships. They have monthly bank account charges. They have minimums, maximums. They have all these relationships. They have to manage all these different exposures. So they have pound exposures in pounds, euros, Canadian dollars, Australian dollars, and yen. To worry about, then what's possible now is that you can actually send one file and fund it in US dollars, and all of these complications, a vast array of these complications go away. Again, the biggest thing is to make sure that you're really pay attention to those FX rates. And then the other piece, which I didn't mention at all, is these intercompany booking issues, which I never quite understood at my company. So that's really what you can go from this, all these relationships. So there's 5 dimensions of complication for each of these different bank accounts. You get do you really need those, right? When we can move to something that's so much easier and helps people across the office of the CFO spend more time on value-add activities. And so let's talk a little bit about the business case for international AP automation. Again, mitigating and rationalizing the bank accounts is a huge piece of it, but there's more. There's so much more to it than that. Again, a lot of this applies whether it's international or domestic or just all your accounts payable. You mitigate invoice processing costs. If you don't know how much it costs to process the invoice, you need to look at that. You should also look at how does the cost vary by country, right? What about those international invoice? What does that look like? And then let's say you rationalize your bank accounts. How does that go down? Invoice processing costs, anything that's manual, all the disputes that we have, and then the opportunity cost of time being spent on non-value-add activity. It can mitigate time spent on resolving supplier issues and disputes. Again, those are more prevalent and probably more complicated as you go international. It allows you to take discounts. Your efficiency allows you to take discounts and even know that you're taking them, right? Make educated decisions. A lot of companies still don't know if they're taking all their discounts, why or why not. Depending on the financial conditions, it can facilitate early payment programs, help you be a better partner. And then, like I said, it impacts the productivity of employees processing invoices. In addition to those who are approving the invoice, it can mitigate your payment processing costs. You take more control of your payment types, allows you to collaborate with suppliers to do that. You can get rebates from commercial card payments. There are programs out there if you can convey the cost to your suppliers of taking those, and they understand that. Improves your working capital management. To me, the big part of it is delivering predictability into your accounts payable in every currency that's relevant. And so really helping us understand, right, the how and why. And so we are mitigating not only maybe borrowing in US dollars, what about borrowing in foreign currencies, right? That's expensive. What about inefficiency of our FX transactions? We might be entering into transactions that we don't need to because we don't have good forecasting. We don't understand the how and why of our international payables. We talked about it can help us mitigate FX risk exposures. A big part of that is that visibility and understanding opportunities to rationalize those bank accounts. And then, as we've talked about quite a bit, it mitigates the cost and complications of international bank relationships, which are many. Again, account opening, account signatories, bank fees, and just again, the reporting and the visibility, understanding the issues that happen, mitigating and getting visibility into all those transactions. So our key takeaways here, as we wrap things up, I'm going to go ahead and launch our final polling question here as I dive through these. Sorry, the choice B should be yes, but in Q1 of 2022. I think we've already gone through 2019. That was painful enough. So the key takeaways are you really need to understand your current and emerging AP challenges. It's worth it investing in understanding the complications of international accounts payable. There is technology out there that allows you to cost effectively mitigate your international bank accounts, which can be a huge productivity drags. And you should define and communicate the value of AP right-sizing AP related technology at your company, not only now, but in the future, especially if you are going to be expanding into international markets. Again, these supply chain is getting dicey, and I don't see that really going away anytime soon. So I'm going to leave the polling question up for just a few more seconds for you guys. All right, let's go ahead and close the polling question. Finally, as we wrap things up, I want to thank my webinar partner again today, Tipalti. Sincerely appreciate their thought leadership partnership, which has been going on many years. Once again, I want to wish everyone a happy holidays and prosperity in 2022. I sincerely appreciate each and every one of you. Let us know how we can get better, and looking forward to many more great things in 2022 and beyond. Make the rest of your day great, everyone, and make your 2022 year even better.